Kia ora, and welcome to Thursday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news. Financial markets are starting to see the international geopolitical risks as something that can undermine their bull run. The oil price rises caused by the Trump's Gulf War are messing with the outlook in a much more visible way today. But first, in the widely expected result, the US Federal Reserve held its benchmark policy rates unchanged at 3.75% in an 8-1 vote, with only Trump's insert wanting a lower rate. 3 other members abstained, not wanting language that wanted to lower the easing bias included in the statement. This is likely the last meeting Powell will lead, although he said he will stay on as a governor for a period of time. His term officially ends in January 2028. Benchmark yields rose, the US dollar rose, and stocks fell on the news. US mortgage applications fell 1.6% last week, even though benchmark interest rates hardly shifted. The fall affected both refi activity and new home purchases. And US durable goods orders rose just 0.8% in March on a seasonally adjusted basis to be 2.8% ahead of year-ago levels. But with US producer prices up 4% in the same period, this isn't a real increase. But there was a big jump in US housing starts in March, up to over a 1.5 million annual rate and up more than 10% from February, and to its highest level since January 2024. The US trade deficit rose 5.3% in March from February to $88 billion for the month, about the level expected. And US authorities reported that their crude oil stocks dived 6.3 million barrels last week, and their petrol inventories fell by a similar very large amount. This has had a dramatic impact on the West Texas Intermediate crude prices, which jumped. In Canada, their central bank also held its policy rate at 2.25%, also as expected. Some observers saw the review as hawkish, with rate hikes coming sooner than previously expected, though. In Singapore, they reported a sudden and very dramatic jump in producer prices for March, up 21.6% from the same month a year ago, with oil-related prices up more than 60% in March from February. And Germany said its CPI inflation will be 2.9% in April, all due to high energy costs. Global data out for March air travel revealed an overall 2.1% rise, but international travel dropped 0.6%, while domestic air travel rose 6.5%. A large part of the reason was the sudden sharp drop in the Middle East, down 60%. Asia-Pacific travel rose 11.5% in the month. Australian domestic travel was up 8.8%. Meanwhile, air cargo activity was severely disrupted by the Middle East conflict and Trump's Gulf War in March. It fell 4.8% overall, with international cargo demand down 5.5%. Asia-Pacific demand was up a modest 5.5%, but North American air cargoes fell 1.5% and Middle East cargoes fell 55%. April is likely to be much worse. Most airlines are cutting flight capacity as the fuel price and availability situation worsens sharply. April data will be bad, May likely even worse. The US Treasury 10-year yield is now just on 4.41%, up 6 basis points from this time yesterday. And the price of gold will start today down $56 at $4,543 an ounce. Silver is down $2.50 at just on $71 an ounce. And American oil prices are up $6.50 at just on $106.50 a barrel, while the international Brent price is up $7.50, now at $118.50 a barrel. And the Kiwi dollar is down 50 basis points from yesterday at 58.4 US cents. Against the Aussie, we're down 10 basis points at 81.9 Australian cents. Against the euro, we're down 20 basis points at just on 50 euro cents. That all means our trade-weighted index starts today at just under 61.9, which is down 40 basis points from yesterday. And the Bitcoin price starts today at $75,931 and down 0.3% from yesterday. Volatility over the past 24 hours has been modest, though, at just under plus or minus 1.5%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. We'll do this again tomorrow.